Welcome to my daily report market analysis videos with me, Richard Perry, market analyst at Hantec on Tuesday, the 16th of June. We've had a turnaround in markets again. This one has been induced by the Federal Reserve. There was a corrective outlook that had been developing in recent sessions, but that has now been turned around once more. The Federal Reserve has suggested and said that it's going to be buying up US corporate debt. And again, that has fueled the risk rally. And we can see that through these equity markets, certainly. We saw a big turnaround on US markets yesterday. It were sharply lower initially, but then big rebound into the close. And that rebound has continued today. And you can see it through Asia markets. So the Nikkei up 4%, European markets 2.5%, FTSE almost 3.5% for the DAX. And a turnaround on Treasury yields as well. Treasury yields picking up on the 10-year. And the US dollar has fallen back. So the usual sort of playlist really for the risk recovery is back on. Now the question would be, how far does this risk rally go? Well, it depends, I think, on news flow surrounding the second wave of infection rates in Beijing and also the US rates picking up as well. So it depends on how they develop, I think, in the coming days as to whether this risk recovery can continue or not. But we have seen quite a strong move today, certainly on equities anyway. Now, the question mark surrounding the data points today, we've had some pretty encouraging UK data, which has sort of played into a sterling rally today. We had employment data for the UK coming in better than expected, staying at 3.9% on the unemployment rate. Now, I can't for the life of me imagine that that's going to be the same case perhaps into May, because I think you're going to start to see some redundancies starting to come through, certainly into the summer anyway. But that at the moment is holding up at 3.9%. That's pretty good for the UK, and it was a good sign for sterling. So it comes ahead of the Bank of England rates decision this week. We've also had the German ZEW data, which came in ahead of expectations. Current conditions better, the sentiment also better. So that has again helped to sort of stabilise a bit of the euro move that we had seen under pressure previously, but now has turned back around and looking higher again. So some interesting moves that we've got there on the data front. Now this afternoon we've got the US retail sales data. Retail sales for the US is expected to bounce back sharply in May by 5.5%, but obviously after a 17% decline in April, still nowhere near makes up for that loss, but still it's a good sign, and it'd be interesting to see if that sees any sort of upside surprise, certainly given the employment data of the non-farm payrolls a couple of weeks ago. We're also looking for industrial production to bounce back in May as well. Capacity utilization is another metric that I think we're going to be having to focus on in the coming months, how capacity utilization for industry responds to the removal of lockdown. Something to keep an eye on there. So a few data points in the US this afternoon. We've also got Fed Chair Powell testifying before Congress, his biannual or half-yearly testimony. So Congress is today, and it'll be interesting to see how he puts out. Likely to be still pretty dovish, I would imagine, certainly considering potential for second wave impacts through the US states. So that takes me on to my chart of the day, which is silver. Now what we have seen is silver rolling over actually in the past couple of weeks. If you look at the performance of silver on the relative basis in the last 2 weeks, it's underperforming quite badly actually across the major currencies anyway, and it's now threatening this top pattern. Had a downside move below 1720, that key support near term for the completing this top pattern. It had a downside break yesterday that rebounded into the close. Had another test of that 1720 today and held that move. So there's some interesting testing of support going on, not breaking down yet though, but look at these momentum indicators falling over on RSI, MACD and stochastics. So it doesn't bode all that well for the continuation of the rally, but certainly that 1720 I think is a very good gauge, and if it closes below that, it will certainly arguably complete this top pattern and then imply around about a dollar or so of downside move, maybe a little bit more, back towards the sort of 16 figure mark. And you'd certainly think that 61.8% fib is then on, quite significantly on. So that would be the retracement target at least. And this uptrend comes in around 1690 area, 17 big figure tomorrow. So yeah, I think that it'll be it's an important level, that 1720. If it starts to be broken on a closing basis, I think that really is silver starting to roll over. So what about on the hourly chart? Well, the hourly chart just shows that this technical rebound in the last day or so has just come back into an area of overhead supply, really around that sort of 1750 to 1775 mark. And I think that that is, again, a little bit of a concern for how this market is moving. So with that in mind, I wish you good luck in your trading today. Click here to subscribe to our analysis videos and go to our website to sign up for our webinars, and also click to watch our Trader Talks videos to gain some top trading ideas.